If you've ever had a client pay you right away for a product or service that you've provided to them and wondered, should I create an invoice to record this transaction? You're definitely not alone. That being said, there is actually a better way to record a transaction like that, and that is by using a sales receipt. Let's go ahead and get started. So to enter a sales receipt, I'm going to go up to the plus create button up here and then select sales receipt under customers. And you can see this pulls up a transaction that looks very similar to an invoice, but there are a few key differences. So first, when you're entering a sales receipt, you are not creating accounts receivable. You are telling QuickBooks that you were already paid for the transaction that you're entering, and you're going to tell QuickBooks how you were paid. Or a cool feature is you can actually also use QuickBooks as the merchant processor if you have merchant processing set up. Since this is just a dummy training file, I don't have merchant processing attached, but if I did, I could enter a person's credit card number and have them pay for this transaction through QuickBooks just like that. For the purposes of this example, however, I will be going ahead and saying that they're paying me with a different method. In this case, it'll be a third-party credit card processor that I use. So I would first want to select a customer. And if it is an existing customer, you can select from the drop-down menu, or you can add a new customer right here. I'm going to select an existing customer just so we can get started. I would want to choose the date, and then I would want to select their payment method. Now, I'm going to, like I said, use a third-party processor for this transaction to show kind of how this might end up working out in the real world. If you're using a merchant processor, there's always the chance that this deposit would get grouped with other deposits that happened on the same day. So if that's the case, I would want to select Undeposited Funds as the deposit to account. And the reason for that is that it will allow me to group deposits together so that my deposit amount matches what actually ends up hitting my bank and therefore comes through my bank feed. But if this is going to be a single transaction, let's say it's a check, that's the only one you're depositing that day, you know what account you're depositing it to, you could also select the account from the drop-down menu. I'm going to go ahead and leave it in undeposited funds though, and we'll keep on going. So you'll have to enter the product or service that they're purchasing from you. In this case, we're going to call it the 6-month bookkeeping boot camp. And we'll also say that she purchased the Your First 90 Days in QuickBooks Online workbook, okay? And those two items together come to a total of $3,589. Now, since I have this all set up the way that I would like, the date is today. You can always enter a service date if you would like to, but for this particular transaction, the service date doesn't really apply. If you are an electrician or a plumber or somebody who goes to someone's house and provides a specific service on a specific day, you may want to enter a service date so that it matches up with any other tickets or anything like that that you might have. But for all intents and purposes, this transaction is complete for our demo today. So I'm going to go ahead and hit record and close. Now, let's go and take a look at what this actually did to our reports. If I go to reports and then standard reports and look at the profit and loss, I am going to see a couple of things. So first, if I click on training materials, I am going to see that $19 for the book that she purchased because that is a training material that I sell. If I go back to report summary here and then click on bookkeeping services, I'm going to see there is that $3,570 for the 6 months of bookkeeping that she purchased from me. So this is exactly what I would expect to see. And if I used accrual basis accounting and entered an invoice, this is how it would be showing up on my profit and loss as well. Here's where we see a little bit of a difference. If I go back here to my standard reports page and click on balance sheet, the key difference between a sales receipt and an invoice is that I have not created any accounts receivable. My accounts receivable is still 0 because I told QuickBooks that I was already paid for this transaction. Therefore, nobody owes me any money, okay? We also see here that this amount is sitting in undeposited funds, which is basically QuickBooks' way of saying, hey, there's this amount that's kind of outstanding and nebulous at this point. where does it need to be deposited? And if a deposit for exactly this amount comes through your bank feed for a checking account or a savings account, then QuickBooks will offer that up as a match, and you'll be able to match that up and zero this account out, okay? However, if you might have multiple deposits on the same day and they all get grouped together, this deposit might get bundled with several others to create the total that actually does appear on your bank statement. Now, if I had deposited this, if it was a check and I did a mobile capture and deposited it right into my checking account, I could have just mapped it straight to my checking account and there would not be an amount sitting here in undeposited funds, okay? So that is the really big difference between what's happening with a sales receipt and what's happening with an invoice. The sales receipt, however, is still recording the income, and it's also still adjusting inventory if we happen to have inventory and track it in QuickBooks Online. So let me go ahead and give you one other example for a reason that you might want to use a sales receipt, and it's a little bit more about bulk data entry than it is about entering one specific transaction for one specific customer, okay? So let's say I'm going to go back to the home screen and we'll just start over. Let's say that I went to a trade show last week and I had a booth there and I was talking to small business owners and I took copies of my book about the first 90 days in QuickBooks Online, and I was selling copies of them throughout the weekend. So I don't want to necessarily create a sales receipt for every single one of those books that I sold, especially because people were sending me money via PayPal. Some of them bought 2 or 3, in which case I gave them a little bit of a discount. I would want to look at doing one transaction to capture all of that. And the primary reason being, I am going to eventually deposit the money that I received from selling those books, whether it's a combination of cash, check, Venmo, whatever it happens to be, into my business account. And on top of that, since I sold books, I want my inventory numbers to be adjusted so that it is showing that I only have X number on hand still. So I'm going to go right here to the plus new again and create a sales receipt. Now, for the customer, like I said, you don't necessarily want to enter one for every single customer that purchased a book from you. And in fact, you might not have gotten everybody's name. So I am instead going to add a new customer, and I am just going to call it Trade Show Sales. Okay. It's a broad name. I'm not tracking it for anything. I'm just doing this so that I can enter my inventory numbers and record the sales. So I will go ahead and hit save on that. The service date, again, doesn't really apply. So I'm going to put in your first 90 days in QuickBooks Online, and let's say that I sold 72 books, okay? We are now going to save this sales receipt. And in fact, what I'll do, I have already made a deposit of this money into my checking account. So I am going to say business checking account. Now, you'll note you don't actually have to put in a payment method because payment methods can vary, okay? So for this particular one, we were looking at multiple different types of payment methods. So all I have to do is tell QuickBooks which account it was deposited into, and we're all set. So once I've done that, I'm going to go ahead and hit record. And let's go and look at what this did on my reports. So if I click reports right here and then standard reports, first we'll go to the profit and loss. And if I click on training materials, I'll see here they are. Here are the books that I sold at the trade show. So that's what I would anticipate. Now, if I go back to standard reports and then select the balance sheet, there are a couple of things I want to call your attention to. First, I don't know if you noticed before, but my inventory asset amount was hanging out at $990 after I recorded the first sales receipt. So the fact that I have this inventory asset going down means that I have told QuickBooks that I have sold off this inventory, and that is representative of the cost of everything that I still have on hand. On top of that, if I click into business checking account right here, and then go down to the bottom, I will see there is that sales receipt for those books, okay? So this is how it all flows through QuickBooks. This is why a sales receipt is the better option when it comes to entering a transaction where you have already been paid. If I had not done that, if I had entered an invoice, I would then have to go through the additional step of receiving payment against that invoice so that it went into the correct bank account or whatever it happened to be wherever it happened to be that I deposited that money. However, since I did a sales receipt, it all was taken care of in one transaction. I never created accounts receivable. The sales were all recorded correctly, not just to the correct income accounts, but also adjusting my inventory on hand. Thank you so very much for watching. I'm Holly from Accrual Mistress Bookkeeping and Consulting. If you have any questions, please feel free to leave those in the comments below. And don't forget to like and subscribe if you'd like to see more videos.